Hello traders, and welcome to my lecture about short position and long position. And I call it the power of long position and short position. And it really is because when the market goes up, you are trading long position. If we try to trade when the market's going down, you're using short positions, so you can use the market either way. If we're looking to make money when the market goes down, we call that short or bearish. If we are looking for making money when the market goes up, we call that going long or bullish. Long position. It's the most popular trading position that we got and the easiest way to trade. And it's about to trade in a long trend and make it a profit when it's go up. And it's very important to look at high trend, so you don't miss the trend. If we buy a stock at $5 and sell that to $10, you make a profit about $5. An easy way to trade. And this is a simple explanation about the long position. Short position is a little more complicated. And you're trading when the market is going down. And we're looking for lower low. And that's meaning that the trend is going down. In this case, you want to short and you want to sell a stock for $10. You need to borrow from a broker or somebody else and then sell it on the market. Then you buy it back when it's going down for $5 and give it back to the broker. You make a profit for $5.